Thank you very much. And as Mr. Lee said, you can take that to the bank. The only problem you're going to have in Hong Kong is trying to decide which bank. We have so many established here in Hong Kong. Now, to this day, international investors still find it challenging reading the signals coming out of China. Questions about market reform, opening up, and the long-term investment proposition for China continue to divide opinions. Now, fortunately for us, Eddie Yu from the Hong Kong Monetary Authority has sat down with the leadership of China's top 3 regulatory bodies. Now, the timing couldn't be better, given that China has just wrapped up the 20th Party Congress that will set the direction for the nation for years to come. So we are fortunate that he is having that discussion. So today, we can take some policy signals from this event and get a better outlook on China's macro and policy environment to come. So we are going to start the discussion with the regulators with Governor Yi Gang from the People's Bank of China. Please.
It's a great honor to have Governor Yi Gang from the People's Bank of China here today to talk to us about China's macroeconomic and monetary policy developments, financial market opening up, and also Hong Kong prospects as an international financial center. So, Governor Yi, let's start with a broad picture of the macroeconomic environment. How do you see the recent economic conditions in China?
I should say that the Chinese economy has remained broadly on track, despite some challenges and downward pressures. The Chinese economy has proved to be quite resilient. In Q3, the GDP grew by 3.9%, up by 3.5 percentage points over the second quarter. The job market remains stable, with a surveyed unemployment rate posting 5.5% in September. Thanks to a bumper grain harvest and a stable supply of coal and electricity, inflation remains subdued. The CPI increased by only 2.8% year-on-year in September, and the PPI increased by 0.9% year-on-year.
Well, COVID obviously has a very profound impact on global economic growth. And against this backdrop, what are your views of China's economic growth potential?
I expect China's potential growth rate remain in a reasonable range. China has a super large market, as there is still much room for urbanization, and the demand of middle-class consumers is still on the rise. Thanks to a large group of engineers and skilled workers, China has built a full-fledged modern industrial system and a high-quality infrastructure network. What is more, technology innovation in China is also on a good trajectory, and hopefully the structural reform will continue to fuel economic growth.
Well, Governor Yi, I fully agree that China's growth potential will be very promising despite the short-term fluctuations because of COVID. Now, monetary policy also plays a part in promoting growth. In the face of the various challenges this year, what's the role of monetary policy in supporting stable economic growth in China?
China's monetary policy stays accommodative to support the real economy. This year, to better support economic growth, we have calibrated monetary policy so that it would provide ample liquidity and lower financing costs. In September, broad money M2 grew by over 12%. Social financing and new renminbi loans both grew by around 11%. Currently, the bank time deposit is in the range of 1 to 2%, and the bank loan rate is 4 to 5%. The financial market makes an efficient allocation of resources. Meanwhile, we try to utilize structural monetary policy tools, providing financial support to key areas such as agriculture, small and medium-sized enterprises, as well as green development. Right now, we are also working on supporting investment in capital expenditure and infrastructure. It will show up in Q4 data.
Well, let me now turn to the RMB exchange rate, which has recently drawn some attention. How do you see the trend of the RMB exchange rate?
We follow a flexible and by and large market-determined exchange rate regime with reference to a basket of currencies. Since the beginning of the year, thanks to sound long-term fundamentals of China's economy, the renminbi remained relatively stable against a basket of currencies, with some depreciation against the US dollar and somewhat appreciation against other major currencies. In the future, we will keep on with the market-determined exchange rate regime. The renminbi exchange rate will continue to remain relatively stable at a reasonable and appropriate level, maintaining its purchasing power and keeping its value stable.
Well, Governor Yi, I think the audience today are very keen to understand what the 20th Party Congress means for them. In your view, how can China's financial industry achieve the institutional opening up that was mentioned in the report to the Party Congress?
Reform and open door policy will continue. To expand institutional opening up, we need to participate in actively international discussion on rules, regulations, and standards setting. We will continue to improve the pre-established national treatment and the negative list approach. We will also continue to improve business environment, protecting property rights, those of intellectual property right in particular, and facilitate investment in financial markets.
Well, let's now turn to another key area of focus for foreign investors, China's property market. What measures has the PBOC rolled out to support the property sector, and what are your thoughts on the outlook?
China's housing sector is linked to a lot of upstreams and downstream industries. Housing is a local market. The city government plays an essential role in stabilizing housing market in its location. To support the healthy development of this sector, we have cut mortgage rates, lowered down payments, and encourage banks to introduce special lending program for developers to ensure the timely completion of unfinished housing projects. Recently, sales and lending of real estate sector have seen marginal improvement. With ongoing urbanization in China, we hope the housing market can achieve a soft landing.
And finally, the PBOC and the HKMA, we've been working very closely together in the development of Hong Kong's offshore RMB business and also in enhancing the financial connectivity between the mainland and Hong Kong. How do you envisage Hong Kong's status as an international financial center and its role as a gateway between mainland and global financial markets?
Hong Kong is and will continue to be an important international financial center, connecting the mainland and the international markets. In recent years, Hong Kong's economy and the financial system have shown remarkably resilience despite disruptions. Hong Kong has great potential in deepening connections with the mainland financial market, financing and investing under the Belt and Road Initiative, FinTech, and green finance. To support Hong Kong's development, the People's Bank of China will continue to help Hong Kong maintain a law-based, open, inclusive, and enabling business environment and enhance its status as an international financial center.
Thank you, Governor Yi. Please join me in thanking Governor Yi for sharing his perspective. I fully agree with Governor Yi that the continued opening up of China's financial markets, global fintech adoption, and green and sustainable finance will present huge opportunities for the future development of the global financial system. Thanks very much, Governor Yi.
We now go to views from Vice Chairman Xiao Yuanqi from the China Banking and Insurance Regulatory Commission on views on China's banking sector.
Today, I'm very honored to be joined by Vice Chairman Xiao Yuanqi from the China Banking and Insurance Regulatory Commission. And he will talk about the impact of the property market slowdown on China's banking sector and also the longer-term prospect of Chinese banks. Thank you, Vice Chairman Xiao, for making time to talk to us today. Well, let me first start with the property sector, which has been a key focus of foreign investors, especially after the defaults of several large property developers. Given the importance of the property sector in the economy, how will you assess the impact of the property sector slowdown to the banking sector?
Thank you very much, Chief Executive Yu. I'm very glad to attend this very important gathering hosted by Hong Kong. I'm also very glad to have this chance to share some views about Chinese banks. Thanks for the question, very good question. That's what we are concerned about. The property sector plays a very important role in the economy. We pay close attention to its development. From the banking side, our supervision data shows that the total exposure to the property sector for the banks is, I think, is at a reasonable level. It's about 26% of the total loans. For the small and medium and small sized banks, the outstanding loans to the property sector is less than the large banks. For those banks, because for the long term, we encourage them to do their business locally and to serve the micro and small businesses. So some of the small banks, their lending to the to the small business, to local market, account for more than 90% of their total loans. And we also require them to comply with the concentration rules and to avoid the lending to big companies. We have the large exposure limitations. So you are very familiar with that. In general, the property sector now is, I think, is stable. It's stable, and we are confident that the exposure for the banks to the real estate market is still very low. Non-performing loans to the property sector for the banks is about 1%. 1%. It's even less than the average level. Another point is that the majority of the lending to the real sector, to the property sector, is the home mortgage loans. It accounts for about 90%. 90% of them are home mortgage loans. Home mortgage loans is in part good quality, and the majority of the home mortgage loans are for the first house purchase. It's generally with good quality. Traditionally, Chinese banks, the Chinese people have the tradition, they do not want to default. So from our statistics, for the past 20 years, the default rate for the home mortgage loans is less than 0.1%. It's less than 0.1%. So it's very low.
Well, Vice Chairman Xiao, let me now turn to the next topic about the development of Chinese banks, especially about cross-border expansion. As China's financial sector continues to open up, we're also seeing Chinese banks expanding their footprint internationally. So what are your thoughts about the longer-term development of China's banking sector, including in the international market? And how should Chinese banks raise their game and increase their competitiveness globally?
Yes, in the Chinese financial market, the foreign participants have been playing a more and more important role. I give you several figures. Foreign banks have set up 41 legal entities at the subsidiaries here, and more than 116 branches in mainland China. And recently, a large number of insurance and wealth management companies have set up. Those insurance companies and wealth management companies are owned by foreign capitals, and the foreign investors are in charge of those companies. We particularly encourage foreign capital to have cooperation and collaboration with the Chinese counterparts, or they can, we in some specific areas with the wealth management, the non-performing loan coping, dealing, and transferring techniques. And also in insurance side, we hope that they can provide some insurance techniques about how to assess the cycle. Those specialists, they can take different forms of participation. They can have their subsidiaries 100% of the ownership, and they can set up branches, and they can also acquire some ownership with the Chinese banks, Chinese insurance companies, and the Chinese wealth management companies. They can take different forms. About Chinese banks overseas expanding, they do have a number of banks, mainly the Big Four, have overseas presence, including branches and subsidiaries in some countries. But the total assets for those banks overseas is about 15 trillion yuan, about 15 trillion yuan, equivalent to 2.5 trillion US dollar. Still a small percentage in comparison with total assets of Chinese banks is more than 400 trillion yuan. So it's about 3.5%. So in terms of the overseas assets, the percent total assets of Chinese banks is still small, 3.5%. As a regulator, we support the Chinese banks to go abroad to do their business. But we have some remaining for them. For example, they need to well serve their customers to achieve commercially sustainable development, to know what the customers need, to know what the local economy need. Because to go to overseas, each regions, each locations are different. Customers are different. Their needs are different. So the first is to know what the customers need is. Ensure that the local customers' needs could be met. The second is to very important is to comply with the local or the host authorities' regulations and also international standards, practices. In different locations, regulations and our supervisory rules are different. Even the supervisory methodology, techniques are different. So they need to adapt to those requirements to in compliance with the local monetary requirements. So that I think that they should do so at any time in any place to ensure that the compliance risk is under control. The third one, I think, is to develop risk management framework and to enhance the risk management capabilities to ensure the quality risk, the liquidity risk, strategic risk, and also the market risk, any risks for the banks. And also the social responsibilities is important to do more climate change, to be more supportive for the green finance and the inclusive finance. For Chinese banks, we encourage them to attract talent for senior managers, particularly from all backgrounds, particularly those talents have local experience, have international experience to help banks to up their games, to more adaptive to the international market, to local market. Those are very important. When I have the prudential meetings with the boards or the senior managers of the banks, I always remind them to have local or international talents come to the board, to senior manager positions, to diversify the composition of the senior manager team. That will benefit for them going abroad more prudently. Yeah.
Thank you very much, Vice Chairman Xiao. It's a great discussion. My own take is that Chinese banks' risk exposure to the property sector are relatively limited and the risk is manageable. And of course, there will be near-term headwinds, but the Chinese banking industry, as I see it, will continue to play a very important role, not just in supporting industries domestically, but as you said, they will continue to expand their global participation in the way that you described and with your guidance. Finally, I would like to thank Vice Chairman Xiao for sharing his insights. I'm sure that our audience will benefit from it. Thank you very much, Vice Chairman Xiao.
And now, going to the third of our three people from the regulatory bodies in China, we welcome views from Fang Xinghai, who is the Vice Chairman of the China Securities Regulatory Commission, to talk about recent developments, including the opening of China's capital markets and a special role for Hong Kong.
I'm very honored today to be joined by Vice Chairman Fang Xinghai from the China Securities Regulatory Commission. He will share with us his perspective on the direction of market opening and also the role of Hong Kong. Thank you very much, Vice Chairman Fang, for making the time to speak with us today.
Good to talk to you, Chief Executive Yu. Thanks for the invitation.
Let me first start with the topic of market access, which is of great interest to our audience today. Despite COVID, in the last few years, we are seeing the continuing opening up of China's financial market, including the continued expansion of the various connect schemes between the mainland and Hong Kong, the removal of foreign ownership limits, and also other enhancements. In fact, a lot of progress has been made in the security sector to allow foreign firms to play a much bigger role in the Chinese market. For example, the removal of foreign ownership restrictions on futures, securities, and also fund management companies. How do you see the prospect of these companies' business in China?
Well, first of all, we opened up our capital markets because that is good for China. They need high quality institutions to play in this market. I mean, China has a huge market and we have a lot of investors, but we still do not have enough high quality institutions, like securities firms, futures brokers, fund managers. So by attracting first-class international players into the market, it's very good for China. And we also have a vision that opening up our markets to international participation will be good for the rest of the world. China, will remain a major driver of economic growth for the world. And we want to share our growth with international participants. That is our vision. That is President Xi's vision. We want to share China's growth with the rest of the world. So with these in mind, our opening up policy is on a very firm foundation. And happily, we have seen very enthusiastic response from international institutions. Many of them have already come into our market, and many of them are in the process of preparing and applying to come into our market. We welcome them all. And for those who have been here, I can say most of them have done very well. Their progress in China has exceeded their plan, exceeded their expectations. So we continue to welcome them in.
Thank you very much for your very upbeat explanation of your policy. Next, I would like to focus a bit more on a topic that is closer to home. You recently spoke about the CSRC's new initiative to strengthen mutual access between mainland and Hong Kong's financial markets, including, for example, broadening the scope of the Stock Connect and also the introduction of the mainland government bond futures in Hong Kong. How do you think these measures will enhance the appeal of Chinese and RMB denominated assets to foreign investors? And what are the implications for Hong Kong? This is something that, of course, understandably, I'm interested in.
Yeah, sure. At the CSRC, we see Hong Kong as a very, very important international financial center for China. And of course, for the rest of the world. China wants to develop what we call a high-quality economy, right? And for a high-quality economy, you must have a high-quality capital markets. And so we are here at home, we are full speed ahead in terms of building up a high-quality capital market. But that takes some time. And Hong Kong is already a high-quality capital market. So for China's economic growth, we need Hong Kong. Hong Kong can play a very important role in help grow the Chinese economy. And so because of that, the CSRC is fully behind our central government's policy of grow the Hong Kong financial market even more and make it even a stronger financial center. And that is why about a month ago, or a little bit more than a month ago, I, on behalf of the CSRC, announced 3 major policies to support Hong Kong's growth as a financial center. Among these, I think 2 of them are extremely important. One is, to allow the Connect to cover truly international companies that are listing, that are going to be listed in Hong Kong. Some of them, of course, are already listed in Hong Kong. And that would allow mainland investors to access these international companies. So that will help a lot Hong Kong's ability to attract these major international companies to list in Hong Kong. The second policy is also very important. Is the relaunch, I would say, of the Treasury, the Chinese Treasury bond futures market. Chief Executive, you just mentioned that Hong Kong has this vision to become an offshore RMB financial center, right, where international investors can access RMB assets in Hong Kong. And we support this vision. So with that, Treasury futures market, a Treasury futures contract being traded in Hong Kong, that will help a lot the international investors' risk management. And that will also by itself help enhance the entire financial RMB financial market in Hong Kong. It will help pricing and so forth. So these are very important policies. The third one is to allow Hong Kong to set up what we call RMB counter in the stocks listed in Hong Kong. So for these large stocks, they will have both RMB trading as well as Hong Kong dollar trading. So these 3 policies put together, I believe, will help Hong Kong quite a lot in terms of realizing Hong Kong's vision of becoming an even more important financial center. And that would also attract more international investors to come to Hong Kong and invest into these RMB assets. Now, let me add one thing. In order for Hong Kong to become a major offshore, or maybe even the most important offshore RMB financial center, I think ultimately it will depend on how successful the Chinese economy will be, right? And on that, I'm very confident. International investors should read more carefully about the work report that President Xi delivered in the recent 20th Party Congress. There, he re-emphasized the centrality of economic growth in the entire work of the party and the country. And that's very significant. And that will, it has been the case in China, and it will continue to be the focus for China for the foreseeable future. We are fully focused on economic growth. And also, but then people would ask, how do you grow the economy, right? And it's simple. Our past 40 years has already pointed the direction, which is market-based reform and opening up to the rest of the world. So President Xi, re-emphasized the centrality of the market mechanism in allocating resources in his work report. And he also said pointedly at the end of the Congress, there was a press conference. I hope people noticed that. Right? There's a press conference where he restated that China's door of opening up can only be bigger and bigger going forward. And Hong Kong will play a very important role in the overall opening up of China's economy, as well as, of course, the Chinese financial sector.
Thank you for this last comment, especially about the centrality of economic development in President Xi's work report, and also his emphasis on the market mechanism and the continued opening up. I think these are very, very important messages for our audience today to take away, and for the broader audience to really understand. That's extremely important.
Let me also add, I deal with international investors quite a lot in my daily work, right? And I'm afraid some of them have read too much the international media report about events in China, because a lot of media reports let me put this way, they really don't understand China very well, and they have a short-term focus, and I would advise the international investors to find out what's really going on in China and what's the real intention of our government by themselves. Don't read too much of these international media.
And I think today's communication with you will help a lot in extending this direct message from Beijing to the audience here. So thank you very much, Vice Chairman Fang.
Sure.
And I'm sure that our audience will be benefited from your insights. But my own take is that, well, we're faced with very uncertain external environment. We're bound to see short-term market fluctuations, but that will not reverse the long-term appeal of China's capital markets or China's opening up, like what you just said. And Hong Kong's unique role in connecting the world and the mainland will continue and remains very important, and there will be new exciting opportunities for us. I think that's an important takeaway.
I totally agree with you. Don't bet against China and Hong Kong.
All right. Okay. Thank you very much, Vice Chairman Fang.
Sure.
Okay. Thank you.
Talk to you later.
All right, and thank you again, Mr. Yu, for putting that collection of views for it. Those are exactly the kind of views that we need going forward to be able to navigate through uncertainty. So we're very fortunate to have them. We are going to take a very brief pause to let the chief executive take his leave. He has other pressing duties he needs to attend to. So once again, Mr. Li, we thank you for joining us today. And you take care of Hong Kong through this typhoon. Thank you very much for joining us today.